Hello, it's Adil, Mr. Intermarket Analysis, bringing a review of the FTSE 100 for Monday's, a summary of Monday's price action, basically going into Tuesday's trading, the 25th of February 2014, and trying to see exactly what we're going to be expecting on the morrow. Okay, so basically, what do we have here? So we have the FTSE 100 chart before us. Let's start with the larger time frame. So obviously, I've already explained weekly chart. There is a high probability of the FTSE in my previous video, as you know. I do favor the long side of it breaking out, provided, remember, provided there's a fundamental catalyst for it to do so. Okay, so obviously, if Asian markets had remained buoyant overnight, then I would certainly be a perma bull for today's trading, and I would have certainly been looking to buy the dip. Okay, be the popular phrase. BTFD, okay, so buy every dip there is, because Mr. Bernanke and Miss Yellen has your back. Okay, so basically today, obviously, as we all know, the Asian markets got absolutely annihilated. Let me just bring up my terminal here. Let's just have a look. Okay, so so as you can see here, China steel, iron ore, futures, etc. hit record lows. Copper got hammered. Copper got smoked today. Okay, the Aussie was down overnight, obviously with Chinese weakness with regards to the loan scenario there. Obviously, the whole scenario is just a credit crunch, basically, because China wants to curb the rapid increase in property prices, etc., etc. So basically, what did we have? So the Asian markets overnight, okay, were basically down. Nikkei was down, Hang Seng was down. Obviously, the Shanghai was down as well, so we've gone down quite heavily overnight. Okay. So obviously that basically meant that there was a risk-off scenario. So there was no catalyst from a fundamental perspective for the FTSE to propel higher. Okay, hence the reason why I took a bearish stance. I shorted the FTSE around the 6.815, 6.816 region. I was almost plus 20 at one time, and before I knew it, or before we knew the market reversed powerfully and obviously started to propel and make new highs. So certainly a tricky day today. I mean, I got stopped out on the Euro stocks on the long side. I got stopped out on my Nasdaq shorts. I got stopped out on the FTSE shorts as well. I had an Aussie short I got stopped out on as well. I then subsequently switched my bias to a long on the Nasdaq, long on the FTSE, and a long on the Euro. The Euro managed 25 points from there. The FTSE managed 20 odd points from there. Okay, so certainly strange day. Certainly a strange day. Bear with me 1 second. My daughter's... Okay, quiet. Okay, so basically, yes. So that was a summary. Okay, so we had the Asian markets down overnight. Risk FX commodities all under pressure. Yen pairs obviously under pressure as well. Obviously that caused a risk-off scenario, and then obviously in came the German data. That certainly spiced up things and turned things around. Sentiment risk certainly took a turn, which was quite strange really, because obviously given the fact that the Asian markets were hammered overnight and there was concerns, liquidity concerns, and obviously tapering concerns as well coming from last week with regards to Miss Yellen, etc., etc. Yet the markets managed to propel higher. I could understand if they were neutral on the day, but yeah, certainly propelled higher. So again, very tricky. Again, very tricky. Obviously, the Nasdaq certainly erased all its downside, and obviously S&P has gone and made new highs. So whether this is something to be sustained, again, yet to be seen. Especially given the fact that the yen pairs are not confirming the move. So again, that's certainly cause for concern. Copper and iron ore certainly under pressure. Again, not confirming the move. Although having said that, oil and gold are certainly remain afloat. But they afloat primarily, number one, obviously given the fact that the data out of the US has been relatively poor as of late. Even today it was pretty poor. That obviously triggered the QE junkies to start buying the markets. Okay, started to buy the market and obviously buy the dip, etc. Mentality came back again. And obviously the QE trade was back, and obviously that's the reason why gold is certainly going higher as well. The inflation data in the Eurozone wasn't as bad as expected, although there was talk of negative deposit rates by one chap who always it's always a random chap that comes. Okay, so although Draghi has out and outright obviously negated the possibility of negative rates. Okay, so, and also he had the opportunity of obviously a rate cut, and obviously he didn't implement that as well in his last meeting. So what do we conclude from there? Okay, yes, German data was relatively good, but again, that was already, I mean, to a large extent, given the fact that the DAX has obviously rallied. It's back up above back to 9,700 now. Certainly all baked in the cake, so to speak. Okay, so if we look at the markets, I mean, let's have a look at German DAX, take that into consideration here. Let's just go to our daily chart, and obviously you can see that gap level here is acting as a solid resistance and has held ever since. Okay, so this level here. Okay, so that's basically where we are at present. So obviously if the DAX continues higher than 9,800 beckons, and that's probably the next target for the German DAX, but that's only if the Nasdaq can obviously sustain and make new highs, and at the moment it's certainly struggling to do so. Okay, so let's go back to the FTSE now that I've covered the fundamental side of things. Okay, so at present the catalyst, again, from an individual perspective or trading perspective, TA and FA must align, and Intermarket analysis must give you that clue as well. Now the Aussie certainly has propelled higher, and obviously that stopped me out at 0.9010. I put a stop loss just above there, 0.9010, and it certainly has moved higher, even though the situation in China, as we all know, was down heavily overnight. The Japanese yen pairs haven't really sustained or made a new high. So again, it's all very it's very hard to read, very hard to read right now. It's not, from Intermarket analysis perspective, the market certainly is dysfunctional. That's probably the best word to describe it. Okay, now let's look at the technicals now. So with regards to the technicals, like I explained, weekly chart certainly has hit that door a few times and certainly wants to break and move higher. I do have a swing short on the FTSE. My stop loss on the swing short is 6890. That will be the line in the sand. Obviously, if the market propels higher, then there's obviously, number one, inside information. So individuals, agents, or it could be hedge funds, etc., have access to information that me and you don't have. That is certainly giving them the catalyst that is not obviously hidden from the market, hidden from market participants. They have the edge. Okay, it's well renowned that the Fed emails these individuals, okay, and to give them an edge in the market before the average retail, average investor or average trader. Okay, so obviously they must be privy to certain types of information that we're not. Okay, so remember, it's not a level playing field. If it was, obviously our success rate will be much higher and theirs will be much lower. Okay, and the markets will be much more volatile as well. The markets are very calm and collective. Obviously sustained moves higher. Why? Because the individuals that are buying have conviction, because they have inside information. Okay, so that's basically how the markets are run. You have to face it, accept it, and obviously you trade accordingly. Okay, that's why intermarket analysis gives the ability to read between the lines and read and smell the manipulation. Okay, manipulation, intervention, call it what you want. That's just basically how the game is played. So given the fact that the FTSE obviously has sustained its move higher today, that basically means a number of things. Okay, you can interpret that from your own understanding. So from my perspective, basically means that the Chinese concerns are not something that the individuals are interested in right now, or traders or investors. Why? Because they're anticipating a slowdown in tapering. Okay, so they must, given the fact that the economic data has been weak in the US recently, given the fact that you've had a cold snap, etc., etc., that may well give be the premise to slow the tapering. Okay, so you taper the tapering, and that's what's causing the markets to continue to move higher. Expectation for higher prices, because the QE junkies are obviously excited right now. Okay, given the fact that Asian markets are down overnight, my intermarket analysis model certainly states that the FTSE should certainly come under pressure. I understand that the commodities are certainly doing well to a large extent, but it's not based on fundamental growth. Okay, situation in Ukraine right now obviously is helping oil, helping gold. That obviously is not a factor that creates organic growth for equity market rally to sustain itself. Okay, so these are all factors that we take into consideration. Now, the other factor as well, that if we were to read between the lines with regards to the FTSE, is given the fact that the economic data out of the UK in the last week or so has certainly not justified the sterling rally, and obviously sterling has pulled back. It's remained under pressure, and that again alone could be the catalyst for the FTSE to propel higher, because we have a reversal in sterling. Okay, so the expectations of a rate rise, etc., etc., that was keeping the FTSE below this level at 6880, 6860. Obviously that factor is not there, hence the reason why the FTSE now wants to propel and move higher. Okay, etc, etc. So these are all variables that we have to consider. Okay, and a breakout is a breakout. Okay, if it's sustained, confirmed, then certainly I'm no bear. I'm not no perma bear at all. I'll certainly switch my bias like I did today. I got stopped out at 6845. I switched my bias to long, and I nailed the long side as well. So it's irrelevant to me. Okay, all I need to know now really is that, and this is the most important factor here, is this a fake out or is this a breakout? That's basically what it comes down to. Okay, so is this a breakout or a fake out, and how do I ascertain that, or how do I confirm that? By my variables. So, for example, the FTSE obviously has a good relationship with the Dow Jones, for example. Okay, now the Dow Jones, as we can see, we are hitting the 75% retracement. Okay, and that's the key level here. Now, if the market of the Dow breaks above here, okay, and sustains the move higher, okay, that's a bullish scenario. Okay, I expect the FTSE then to sustain and obviously continue its ascent, whilst the Dow goes up to double top around the 16,000 level. Okay, 16,600 level. Okay, so that's basically what it comes down to. So obviously we need to see where this market closes today. Given the fact that the volume is very, very poor, that again is not a good sign. Okay, with regards to the US markets, the volume is very, very poor, as you can see here, very, very poor right now. That's not a good sign. Okay, when the dumps or when the sell-off occurs, it's occurring on a heavy volume. Look, heavy volume, sell-off, heavy volume, sell-off, heavy volume, obviously sell-off, heavy volume here, sell-off. The next day the market starts to float higher and rally what on light volume. Okay, so the volume is diminishing. So this is all these are all signs of a bull trap. Okay, so again we need to be cautious and remain vigilant, and obviously get confirmation as well. Now with regards to the S&P itself as well, is this a breakout, is this a fake out? We'll soon find out. 2 hours to go, and let's see where this US market closes, and I'll be able to ascertain and see what's happening there. Okay, so these are all factors I've taken into consideration. So for example, the DAX, I mean, if the DAX remains below this 9720 level, which is gap fill resistance, then obviously the market remains bearish. If you break above that, then obviously 9800 is next, and that obviously can propel the FTSE to move higher as well. Okay, so go back to our FTSE chart again now. Let's have a look at the daily chart. Daily chart, basically we are in a bullish channel. Obviously we are into resistance here. Okay, so the only trend line that I can really draw really, I mean, is a diagonal one, and obviously that's projecting a potential target of around the 6880 level, probably higher, and obviously we are there right now. So I remain short with subscribers from 6880. Okay, and looking for a move lower and a potential break of this channel, and obviously a sell-off that will obviously ensue. Okay, so that's something that you certainly need to take into consideration, obviously, going forward. Okay, so we've been in a rising contracting wedge pattern. Okay, we are at double top resistance. Obviously that's exactly where we are, hence the reason why I've taken a short. Okay, and the 6880 level, looking for a potential break lower. Okay, and obviously a double top resistance there going into the close. So let's see how this market plays out. Okay, we've obviously closed this, well, there wasn't much of a gap there, to be honest with you. We held the 200 MA. The FTSE itself on the 10-minute chart, I mean, obviously hindsight is a brilliant thing, but basically we had a potential inverted head and shoulders. I was aware of this pattern, but I didn't expect this pattern to play out. I expected this pattern to fail, and a failed pattern equals an emotive sell-off, and obviously for the markets to move lower. And I was looking at a potential target around the 6780 and 6750, 6740 level, given the fact that Chinese market was under pressure overnight. Now we had a beautiful trend line. The market was obeying that, being obedient to it. Obviously we had this short squeeze here, given the fact that US data came out and the QE junkies got excited, thinking that Miss Yellen is obviously going to put the brakes on tapering, etc., etc. And obviously they must have inside information regarding any potential bailout, so on and so forth, and obviously they're front running the markets as well. Okay, so that's basically what's happening right now. Okay, now obviously on top of that as well, a lot of individuals are trying to catch the top in this market. Whenever you try to catch a top, generally speaking, the markets do have a tendency to go out and knock out the previous high, and then obviously reverse quite violently, given the fact that everybody's been shaken out. Okay, now this is the pattern that I wasn't potentially expecting. I mean, this is your left shoulder looking for a head, looking for a touch here, right shoulder, and obviously the market to break down and go south. Obviously that didn't occur. The market obviously, with regards to the right shoulder, we exceeded the usually it's a 75% rule. It exceeded the 75%, and obviously the market just continued to go higher. So short squeeze party, that's basically what it's all about right now. The market's constantly short squeezing higher. So we'll see. Okay, we'll see. Obviously we take every day as it comes, but one thing that we must bear in mind is, given the fact that the Asian markets were heavily under pressure, and yet the FTSE shook off that pressure and continue its ascent, you have to respect that. Okay, you have to respect that. But again, from an alternative perspective, a lot of people were caught short with the pants down. Obviously have been stopped out, spiked out, all the amateurs trying to catch a top, and obviously now the market, once it's shaken out all those stops, it will then reverse quite powerfully as well. So that's another factor you need to take into consideration. Well, number 3, manipulation. As we all know, and this is well documented, that the central banks, the last thing they want is for stock prices to go south. So they will obviously try their utmost via manipulating certain stocks, etc., and intervention, etc., etc., etc. Especially when they see a H&S pattern, which is obviously Mr. Murphy's documented as well. They'll intentionally crack that H&S, intentionally just to create a short squeeze, and obviously knock out and dishearten as many bears as they can, so that they can change the psychology and the sentiment in the market. So these are all factors that we have to take into account, especially as day traders. Anybody who ignores that is very naive, from my perspective, is an amateur. Doesn't understand how the markets work, from my perspective. I understand you have to respect price action. We do, okay, that's what I'm doing right now. But price action must be confirmed via fundamentals, because obviously I'm very ingrained, very entrenched in terms of fundamentals, because the majority of traders out there, 89% of the trading community out there, the serious traders, do trade on fundamentals. Okay, technicals is a guide. Really, I mean, fundamentals give you the bias and the sentiment, and obviously the ability to read the tape to a large extent, and obviously technicals just guide you. Okay, that's basically what technicals do. They guide you. It's like a tom-tom. Okay, technical analysis is like your tom-tom, and obviously fundamental analysis is your car. Okay, without a car you can't navigate. Okay, and without navigate, I mean, even then, if you don't have a tom-tom, you can still attempt to get from A to Z. But fundamentals, without the car, you can't get to A to Z. So it's very important that you have your fundamentals, and then obviously to refine your mistakes and reduce the margin of error. Intermarket analysis gives you multiple variables to confirm a particular move. Okay, so these are all part and parcel of trading, folks. So I think that should call it a day there, to be honest, with regards to the FTSE itself. I think I've explained exactly what's been happening. I've explained the resistance levels right now. Obviously my bias remains short. So risk on, risk off, wax on, wax off. Goodbye now.